You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network. We welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. And I'm pleased to be joined by another old friend of the program, even though he hasn't been on in quite some time. He's Geoff Sharp, the Managing Director of Sales and Marketing over there at Eris Exchange. Geoff, welcome back to the program.
Thank you, Mark. It's a pleasure to be here.
And listeners, if you can't figure it out by now, we sound a little bit different. It's not because we're coming to you from our studio in Chicago. We're actually coming to you from scenic and very sunny today, Florida, for the FIA Boca Conference. Geoff, so far, has it been a good conference for you guys?
It has. It's been, useful rounds of engagements with people new and old. I always find Boca an interesting opportunity to connect with people on an informal basis, build that trust. It's so critical to our market ecosystem is excellence, which we all strive for, and then trust. So events like this allow you to engage with people in, they may be competitors, they may be part of the ecosystem that you're a part of. Very valuable meetings in general.
Now, it's been a while since we've had you on, so maybe we'll start. We probably have some new listeners since the last time you were on who are not familiar with Eris. Maybe we'll start there. Give us a quick 10,000-foot overview of what you guys are and what you do.
So Eris Exchange is an independent futures exchange based in Chicago. We're a DCM, regulated by the CFTC, so not dissimilar to CBOT and CME, now owned by CME Group. We have listed a contract which matches the cash flows of the analogous OTC interest rate swap exactly. It is a LIBOR-based index, fixed rate coupon swap future. It may be used in place of an OTC swap, and as a listed futures contract, benefit from all of the things that futures contracts provide their users: simplicity, productivity in the middle and the back office, and of course cheaper from a margin financing and margin posting standpoint, and therefore of interest and benefit to a lot of end users with directional risk. Eris Exchange has been in business for around 6 years. Its benchmark product is the Eris Swap Futures Complex, standardized, listed out of consecutive IMM dates for standard tenors ranging from 2 years to 30 years. We've got a tremendous amount of tenor granularity, meaning that someone looking to offset an exposure that, for instance, could be 5 years and 6 months, could do an Eris 5-year contract, or they could do an old Eris 7-year contract that matches or is close to the exposure maturity of 5-year and 6 months. So very, very versatile swap futures complex. Quite different to your traditional futures contract, which cash settles quarterly or physically settles quarterly. Eris swap futures contracts are in some ways similar to, say, the cash treasury complex, whereby every 3 months the U.S. Treasury will issue a new 10-year note. The old 10-year note doesn't go away. It simply goes off the run and trades off the run And the new 10-year note contract becomes top step, becomes the liquid benchmark. Eris swap futures contracts are very similar in that respect. So the beauty of this is that it attracts in end users that want to hedge exposures that age down the yield curve, and it attracts in liquidity players that are looking for a front contract liquid order book to either invest in or play around in.
You know, it's a goal of a lot of people here at this conference, which is to migrate a lot of that business, which was a stated goal coming out of Dodd-Frank, of course, migrate a lot of that OTC business, which we've seen has a lot of counterparty and other risks attached to it. It's also not the least expensive way to go sometimes in terms of execution, and migrate that onto a listed venue with a little bit more transparency. I know last time we had you on, it was kind of early days for your tenure over there at Eris. It's been about a year, a little more than that now. How are things going in the interim?
So open interest continues to grow at a nice steady pace of around 30 to 40% per annum. We'd love to see actual transactional daily volumes rise, but they've doubled approximately since we saw each other last year, but they're still at relatively low levels. So, to be modest about it, we are not witnessing the levels of average daily volumes that we would like to see. However, over the course of the last year, we've experienced transactions that provide some of the proof of concept that I talked about when we last met, and that was there's plenty of liquidity in Eris because you can actually port liquidity in and out of Eris because it's an exact replica of its OTC origins. So what does that mean? That means that we may have daily volumes of around 2,000 contracts a day, which realistically is relatively small, but we can have days where we have 10,000 contracts trade because an end user comes along and needs to hedge $500,000 worth of DV01 exposure in the market and is able to get executed right on top of the screens, which over the course of the last year to two, we've seen the bid asks in our products on average across the entire curve tighten from about 0.7 of a basis point down to about 0.45 of a basis point. If you look granularly along the curve, our most active contracts, 5-year and 10-year, experience bid-ask spreads of around 3 to 0.4. 90% of the time, our bid-asks are 0.4 or tighter. About 50 to 60% of the time, our bid-asks are 0.3 or tighter. So we now have prices that are comparable with the OTC market, which 18 months to 2 years ago was obviously a dissuading factor for some participants.
It's interesting, you mentioned before, going up against that OTC, and we've seen, obviously, that's been a goal for a lot of firms and a lot of different ventures over the years, is trying to break into what I've loosely called over the years the OTC cabal, which is very prominent in the space you're going after, the swap space. It's a very lucrative space for them. There's only a handful of players, so they tend to, shall we say, not play nicely with others when other people try to come into that space. So what has it been like for you guys having to try to effectively break into that as a new player? Have you found the end users receptive to you guys coming in? Have you found, other people receptive? Or walk us through some of the challenges you guys have faced as you're trying to bring some more transparency to that space.
So very few people have been resistant to the product itself. And I'm even talking, the cabal, as you unkindly
my word, not yours. So
unkindly might put it.
I won't get you in trouble. That's my word.
Actually, it was the source of a white paper written. I can't remember when the white paper was written, but that was the wording used by the. It was written by the Brookings.
I coined that, Geoff. I was very excited.
So
about that.
The guy at the Brookings Institute who actually wrote that paper may have actually heard you on the radio. So we find very few people, if any, who are like, we don't like this product. We've found people who, we love this product, but it's not ready for us to participate. So what do we do to get it to the state at which they might participate? In order to do that, we've got to continue to build this grassroots usage amongst participants that get immediate economic benefit from Eris swap futures. And that's smaller players, whether they be smaller end users in the loan origination space, making $5 million loans and hedging them to CTAs with $100 to $200 million under management, running an RV strategy where they'd like to, express swap spreads. With respect to the big institutions, the big banks, on one hand they're resistant, but on the other hand, they have a valid position sort of surrounding the fact that they have other priorities. So, it's not entirely we don't want this to succeed. It's more, I've got other priorities before I can get to this, and our biggest customers, who are their priorities, are not asking for it. So we're focused on creeping up the food chain from the lowest level customer to one higher up in the hierarchy, looking for those customers that will embrace Eris, want to try it out, and can help complete the ecosystem. So client acquisition isn't so much the challenge for us as completing the ecosystem to allow those clients that are interested to trade our product.
So it's kind of the traditional catch-22 of any new product where people want to trade it, but first they want to see some volume, and how do you get the volume if you don't have the people playing? So that sounds like that you're coming up against that.
And then you've got the people, and it's not a volume thing to them. It's like now an ecosystem, their risk management system, whether it be BlackRock's Aladdin system or Charles River Development system or Calypso, which is widely used, or MISA
You need the
Summit.
vendors to play ball too and everything else.
Exactly. So
it's interesting, the many moving parts you need to get on board.
Many moving parts.
Which is, again, always a challenge, probably a little more challenging in your front. You mentioned, I know you guys play around on the LIBOR, LIBOR kind of referenced product. Did all that kerfuffle over LIBOR of the last year or so? Did any of that come back to impact you guys in your space in terms of lack of interest or anything along those lines?
No, not at all. In fact, if you sort of dissect the debate around what to do with LIBOR and how we replace LIBOR, I think we're still an incredibly relevant player in this space, because what's going to happen is that we're going to create this thing called SOFR first, which is a secured overnight funding rate. And once we've created SOFR, we can then go to creating this new unsecured credit benchmark. But, and this is why it's important. If you think of all the end user risk in the system, it's unsecured credit in some shape or form. So it could be mortgage securities, it could be mortgage loans, it could be corporate credit, it could be small and medium-sized enterprise loans that you're trying to hedge as an asset holder or a broker or a facilitator. You creep closer to the epicenter, you get closer to the sun, and you're talking about just interest rates. The secured overnight funding rate is a short-term index on a risk-free asset, that risk-free asset being treasuries. That's not a good long-term hedge, nor is it a good short-term hedge for an unsecured asset, or an asset that is going to behave more like an unsecured credit. Because in times of stress, what do people do? They go buy the risk-free asset and they sell the unsecured risky asset. So you get widening of spreads. So if you're hedging using the SOFR index, your unsecured credit assets or your risky assets, you're going to be exposed to a great degree of risk. The beauty of LIBOR is if you're hedging with LIBOR, when spreads blow out, your hedging instrument tracks that blowout in the spread. So once they've created SOFR, they'll then go to try to recreate. It won't be exactly the same because, it's difficult to do that. But maybe they'll get to something close. There'll be a market in a spread between SOFR and some unsecured credit rate. The Eris Swap Futures Complex, our patent, since we last spoke, we actually were awarded a patent by
Congratulations. That's not a small feat these days.
It's incredibly important, actually, because it secures our ownership of the method of replicating swaps in futures, in a futures fashion. So once that's created, once the SOFR is created, and a credit index is then created, we can then launch a product on that index quite easily. It's very flexible. We just change the index in our product. So the plan is to watch what develops with the space, see how it develops, potentially even list a product that is a long-term swap on SOFR.
Okay, that's my next question. Are you going to? I'd imagine you kind of have to play with that new the new product. You can't just keep things the old school, as they say, forever. I've been asking a lot of people. You mentioned periods of tumult. We obviously saw one over the last month and a half. I've been asking a lot of different people their different, takes and perspectives, what they saw over, that period of volatility. Obviously, you guys play in a very narrow area of the space, so it might have been a little bit different for you versus a lot of the people who were in the broad equities. But that whole tumult and return of volatility over the Feb 5th and the resulting weeks, was that a big driver of activity for you guys, or maybe conversely, did you see a lot of your players not very active over that time frame? What was it like over there at Eris in that period?
Actually, it was good. We saw a pickup in activity around the uncertainty of the market at that time. We saw some new activity that we'd never seen before in Eris. It was great because we now have tangible evidence to point to go to people and say, see, even during times of stress, we got a market that survives.
Yes.
And, we saw extension trades as the curve was flattening, because the curve has been moving around recently as well. A lot of things went into February 5th. February 5th may be the manifestation of a convexity event within the VIX space itself, but it stemmed from inflationary fears, it stemmed from a flattening of the yield curve. All of these things come together and manifest themselves in market movements. So what was happening in interest rates led to some activity in Eris. And it was great activity. We saw, as I mentioned, extension trades where people move positions from the belly of the curve further out the curve. And we saw sizes of trades that we'd never seen before at the long end of our complex. So we saw some 15-year trades recently. We saw large off-the-run trades. So if you go back to what I said, in that you can actually put on an Eris position and allow it to roll down the curve, it's still a listed futures contract, but it's no longer traded in the front contract main order book. It's no longer top step. It's seasoned. We saw huge amount of activity in off the run, right? Hundreds of thousands of DV01 in our off the run stuff. Old 7s, old 10s that were between 3 to 9 months old, and that moved out the curve into new 10s, into new 15s, into new 30s, as people put on trades, curve trades. So it's been good for us. More recently, as that adjustment has taken place and volatility, came into sharp decline again, and the VIX dropped from 28 back to 18, we saw a tail off. What that tells me is that our participants did their rebalancing, and then less has happened. So it's been a little quieter in the more recent weeks, but I remain confident that we're moving in the right direction. We've got a great product in a market that is just at the tip of the iceberg of market structure change. So the forwards, in my opinion, of our business remain healthy.
And you're right, you have that data point now to point to, say, hey, we've survived. That's always a question about a new product, right? Will it survive times of stress? Will it survive times of uncertainty? You now have that data point to say, not only did we survive, we actually had some volume in this time, and it held up. So that must be, if you're going back to those customers you mentioned earlier who maybe are still a little bit reticent about getting on board, maybe that's one more data point to bring them over to the dark side, so to speak.
It's led to conversations with people higher up the food chain, people involved in rel-val space, hedge funds, participants in the market like that who've I've been watching this. It seems pretty robust. Maybe I can't do all my activity there, but if I start dipping my toes, all that's going to happen is more people are going to dip their toes. The evidence is there.
Sounds like it's been an interesting year or so over there at Eris. I'm curious, we always like to give our guests an opportunity maybe to leave our listeners with a little bit of a hint, a little bit of a tease of maybe what's coming down the pike for them. And you mentioned kind of the evolution of the product a little bit. Are there maybe any other products you guys have in the works in terms of new additions to the Eris offering, or maybe some other tweaks to the platform? Now is the time, sir. The floor is yours.
Well, we're always studying where the next opportunity arises, and we're also always evaluating our challenges. So, our number one challenge is not client acquisition, it's client acquisition for whom the network is complete. So, we're razor focused on initiatives that will help us complete our ecosystem and remove the network externalities. Whether that's participants or other things we might do. And we're also always focused on new products. I would say it's too early to consider swaptions, i.e. options on our swap future, but it remains a product that we believe has huge potential as the swaption market itself has not moved on to a clearing venue. It remains a bilateral business and therefore remains a challenge for the participants at large.
You know, I think I'm legally obligated at this conference to ask everyone who comes on about crypto these days. But I heard some rumors that you guys may be looking at that space as well. Is that an area that really intrigues you guys going forward?
Crypto is an incredibly interesting space. We talk about it all the time. And, you know, maybe speaking out of school a little bit, I always tongue-in-cheek when people say, you know, this market meaning crypto, is riddled with inconsistencies, concerns around regulation, insider trading, none of it.
None of you guys.
It's like, hold on, isn't that like the 70s? You know, I mean, every market at its foundation had a system that was a small group of players with a few bad actors, but most participants wanted to see a cleaner, more robust system. We're one of those that want to see a cleaner, more robust system, and what exists are a foundation, in our opinion, to a thriving marketplace in the future. Which instruments will survive? Yet to be seen, but there is going to be, in my opinion, a thriving marketplace in this new asset class that we're very excited about and exploring very closely.
So there's a chance next time you and I sit down together, maybe 6 months from now, maybe next year at FIA Boca, there's a chance there could be an Eris crypto product we're talking about.
I wouldn't rule anything out.
Interesting. So there you go. I think that's definitely the theme of this conference. I think a good place to leave it. Geoff, I'm glad you can come on. I'm looking forward to seeing how all of this, including potentially crypto, unfolds in the marketplace in the coming months.
Mark, it's been a pleasure.
Thank you.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.